Alright, yo, what is up guys? Welcome back to another video. In today's video, we're going to be going over the ICT unicorn model. We're going to be fully breaking it down inside of this PowerPoint, and later on in the video, we'll also be going over a few examples on the charts. A trade that we took inside the VIP signals room live that actually ended up running for over 120 points. And this was also the exact strategy that I'm going to be showing you in today's video. So let's get straight into it. All right, so first things first, ICT unicorn model. All right, what is it? This trading model consists of a breaker block that is paired with a FEG. So in this scenario, the two PD arrays are overlapping each other. Hence, this trading setup is one of the highest probable setups that there is, okay? So in the next slide, I'm gonna be showing you some examples of this, all right? So as you can see here, we have a bullish example of the unicorn model. Now, what you want in this scenario is you want a swing low that is followed by a swing high, that is followed by another lower low, okay, taking out this low here and tapping into some sort of sell side liquidity on a higher time frame. That is then followed by another higher high displacing through this high here, and this up close candle here is going to be your breaker block. Okay, and in other cases as well, if you have continuous up close candles like these three candles here are going to be your breaker block, right? But just for precise reasons, and if you want to have a more specific zone, I tend to just mark out the highest up close candle, right? And that's going to be my breaker block. Now, if price displaces and closes above this swing high here, it will usually leave an FEG behind, all right? And this is going to be overlapping with the breaker block. Okay, so as you can see, there's two PD arrays in this specific area. That's why it's such high probability. And I'm going to be waiting for a retracement into that FEG or the breaker block and take my entry from there and target an opposing PD array or buy side liquidity. All right, guys, so apologies for interrupting the video here, but I have a very special announcement to make. The full A to Z Mastermind course is finally coming out this week. So by the time this video is released, you would have been able to purchase it. Okay, so this course literally covers everything from A to Z. It cuts out all of the nonsense that ICT talks about and gets straight to the point. It also covers the two trading models that I've used to make over 6 figures in profits from trading. And these are also the two models that I trade inside of the VIP signals room. So if you want to learn them, I highly advise you click the link in the description and go check that out. And because of the special announcement, we're actually gonna be running a 50% off lifetime access sale for the VIP signals room. We're gonna be reducing prices from $300 to only $150, okay? Which is literally the cheapest price we have ever done. We're never gonna be going this low again. Now, this is only gonna be for the first 48 hours after the video is released. And the course is also gonna be running at a 50% off discount for the first 48 hours. So the original price is going to be $900. However, because of the special occasion, it's going to be pricing at $450. So go make sure to take advantage of that offer and secure your spot today. And of course, the VIP signals room is still available for only $50 a month for those people that just want to take my signals and make money. You can watch me trade live every single morning at New York Open on YouTube. A link is posted inside of this group. But anyways, let's get back to the video. Hopefully that makes sense. Now let's go over a bearish example. All right, so same concept here, okay? Swing high followed by a swing low. That is followed by another higher high, taking out this high and taking out some sort of buy side liquidity level. And then that is followed by a lower low displacing and closing above this swing low here. Then your breaker block is formed, and price will also leave an imbalance behind, which will be your FEG. That is paired with your breaker block, okay? These two PD arrays are overlapping each other, and you're gonna be taking an entry either from the fair value gap or the breaker block, totally up to you, and then target an opposing liquidity pool, all right? And I wanna make something very clear. So this swing high here, all right? Price only has to wick above and just take this out, okay? But when we displace lower and form our breaker block, okay, price needs to close below that in order for the breaker block to be formed. It can't just wick below and, you know, mess about. The setup is going to be more higher probability if we actually have a strong close below that low, and then your breaker block is formed, right? So anyways, now that we've gone over the PowerPoint, I'm going to be jumping into some live examples on the charts, and we're also going to be breaking down one of the trades that we took inside of the live signals room. That was also the strategy that I'm explaining to you in today's video. Okay, so this is one of the main models that I trade inside of the VIP signals room, and we're going to be breaking that down in just 1 second. Okay, so stay tuned. Okay, so we're going to be starting off with a bearish example. Now, the first obvious thing that I see is this buy side liquidity level to the left of us here. Okay, so I don't want to see price come up, form our swing higher, form a swing low that is followed by another higher high, taking out this original swing high and also tapping into that buy side liquidity level, which is then followed by a displacement lower, breaking below that swing low and leaving behind a breaker block and FEG, which is our unicorn model. So I'm going to skip this through and we will see if we can get that. All right, so there you go. We have our swing high here, followed by a swing low, followed by another higher high, and followed by another lower low. And look how aggressively price closed below this candle here, okay? It wasn't just a little wick down, it was a full candle closure. Now this makes the setup 10 times more higher probability than if you were to just get a wick, okay? So in this case, since there are 2 consecutive down close candles, this would be your breaker block, okay? Now, if you want a more precise and specific area, you can just mark out this lowest 1 down close candle. That's going to be your breaker, okay? And as you can see, price has left a massive imbalance behind, which is our FEG, okay? Now, since this is a very large area and imbalance that price has left behind, I'm going to be having my entry off of the breaker block. And in this case, my stop placement is going to be valid rather than if I were to just enter as soon as we tap into that FEG, I'll be risking way too much, right? So I'm going to have my entry at the breaker block, stop loss above a displacement candle's high or a swing high, and then target the opposing liquidity, right? So let's see how this plays out here. Okay, this would be your entry. And obviously you can target the next opposing liquidity would be this low here. So you're aiming for around 70 points on that trade if it hits DP, okay? You can target these lows down here, but for this example, I'm keeping it very, very simple. I'm just targeting the next draw, okay? So let's see how this trade plays out here. Okay, so a lot of chop, we nearly get stopped out there, but we stay inside of the trade and price hits our take profit. There you go. That was a very, very clean setup and a very clean example of a bearish unicorn model. So hopefully that made sense. And now we're going to be covering a bullish example. Now, this exact example that I'm about to show you is actually the trade that we also took inside of the VIP signals room live. And it's also the trade that actually ended up running for over 120 points. So I'm going to be breaking this trade down for you lot. So yeah, let's get started. All right, so first things first, as you can see, we have our swing low here, swing high, that is also followed by our lower low, which takes out the original swing low and also taps into some sort of higher time frame sell side liquidity level, right? That is then followed up with a higher high, displacing and getting a candle closure above this original swing high, all right? Now, this up close candle here is going to become your bullish breaker block. Now, since there is not consecutive green candles, we're only going to highlight and mark this 1 up close candle as our breaker block. If there was 2 or 3 consecutive green candles, all 3 of those candles would be your breaker block, okay? Hopefully that makes sense. And as you can see here, this is going to be your fair value gap. So this is your whole unicorn setup. All right, so as you can see, I send this trade into the group long NQ. I give you your entry price, which was at the fair value gap. I give you your stop loss placement, take profit 1, take profit 2, and final TP. And as you can see, boom, take profit 1 smashed. I tell the group to close 50% of the position, set your stops to break even, TP2 smashed, 66 points secured so far. So now this is a risk-free trade. And obviously final TP smashed, 120 points secured. Okay, but I'm actually going to be playing this trade out for you lot in replay mode so you can see how it played out. All right, and there you go. As you can see, the trade played out beautifully. So that's going to be it for today's video. I hope you enjoyed this one, and I hope that you got some sort of value out of this video and learned something. I highly suggest that you implement this strategy into your trading. But yeah, make sure to like, comment, share, and subscribe, and I'll see you lot in the next one.